Meet Sharad Sanghi, who in 1998 had the foresight to create Netmagic, a company that provides and creates the data center infrastructure to service-based enterprises. Through a decade of IT evolution, the company has ventured into high-growth niche services like disaster recovery, cloud management and application hosting, making it arguably the largest IT infrastructure services company in India. A majority stake in the company had been sold to Nexus Venture Partners and Fidelity, who jointly put in 80 crores in 2008, followed by a 70 crore investment by Nokia and Cisco. But the company hit the limelight in January 2012 when Japanese telecom major NTT Communications acquired a 74% stake in the company for 640 crore rupees, valuing Netmagic at close to 860 crores. Speaking exclusively to VCCircle, Sharad Sanghi explains what NTT brings to the table and how the company is on the way to becoming a global player.
The company now is at a stage in which it's seen a decade of evolution in the Indian IT space. You've started with data centers and data co-location, which has generally been the backbone of that company. What is the market today and what is that business really developing into?
Yeah, so today, so first of all, thanks for having me on this interview. The data center market, and with the evolution of cloud technology as well, is one of the fastest growing markets in the IT space. People like Gartner and IDC estimate that this market is growing north of 30%. The cloud infrastructure as a service market is growing north of 100%. And the overall size of the market, depending on various estimates, range from anything between $600 to $700 million right now, but growing at that space.
Okay.
We see tremendous opportunity in this space. We are beating the market, so we're growing faster than the market. And now with NTT's presence, right, a lot of the global multinational customers are also coming and hosting with us. So that was one of the reasons that NTT did this deal, was to service. They didn't have presence in India. So I just want to differentiate that this is NTT Communications that has acquired 74% in Netmagic. And I think from their perspective, they found India to be a very vibrant, hot market. They didn't have presence here, and they already are one of the largest data center providers in the world. They also have a very big cloud offering across the globe, and Netmagic being the leaders in infrastructure as a service space and also being one of the premium data center companies in India, it was a natural fit for NTT because they got the presence that they wanted. And from our perspective, NTT gave us global footprint and also gave where we can offer our cloud services from. It also gave us access to their multinational customers who want to host in India.
Okay.
And so it was a very synergistic event.
Now overall, across the world, we've seen this modernization trend in which everyone is now moving to the cloud and data centers are generally receding. But in India today, what would you say is that trend for data centers? How would we go forward with?
Yeah, so end of the day, I think where you're leading to is, earlier a lot of customers would do traditional co-location, right? They would bring in their servers, or even if they went with dedicated servers, they wanted the service provider, in that case, to provide them servers, physical servers. Now the trend is more towards, increasingly the trend is more towards customers adopting the cloud. End of the day, the cloud infrastructure has to be in data centers as well. So while what ends up basically the difference now is, while initially we may be packing say 20 to 30 servers in a rack, right? Now, and each server was a separate workload. Now because of virtualization and cloud, you can have 400 to 500 virtual machines in a single rack.
Okay.
So your revenue per square foot and the rack density has increased, but the need for data centers is ever growing, right?
Okay.
And that's one point. Second point is that not everybody has adopted cloud. It will take a while. So while cloud is the fastest growing business of ours, it will take a while for various workloads to move to the cloud. One is that there are still customers who are worried, who may not want multi-tenancy. For example, banks and financial institutions.
Yeah.
They may want to do things where they don't share the infrastructure with other customers.
Okay.
Right? So there are perceptions of security. The reason I'm saying perceptions is, in my belief, cloud is as, if not more secure than even your own physical infrastructure. But it will take time, and this is a trend worldwide. So it's not that while cloud is the fastest growing business, even for other data center providers, but that is not to say that the co-location and managed services component is slowing down, right?
Okay.
So those are growing rapidly as well.
Okay.
And I think this will continue. So gradually, cloud will become more mainstream than it is,
Okay.
right? But there will be enough customers who will want to keep, dedicated physical infrastructure as well. So I don't
Okay.
see that changing significantly. I think both will grow. I think
Okay.
cloud will grow faster, but
Yeah.
both are growing.
Talking about cloud growing faster, you're growing now at what, 470%?
Yeah, the cloud, if I look at last year to this year, our cloud infrastructure service piece of our business has grown almost 500%.
So I'm guessing that's growing on a small base,
Yes.
but,
But
how sustainable is this sort of growth going forward?
Yeah, so obviously it's a small base and it's not going to be, I don't see it growing at 470. If you look at the industry estimates, it probably, I expect it to double for at least a couple more years, but it'll.
What is the size of that market for cloud?
The cloud market, so the Indian data center market is about, as I said, between 6 and 700 million, and the cloud market overall, Gartner and others have estimated to be in the range of 100 to 150 million,
Okay.
out of which infrastructure service as a service is at about 40 to 50%.
Okay. And you captured 23% of the...
So roughly, so we believe we've captured about a quarter of the infrastructure service market.
Okay. So I'm guessing that being in the infrastructure space, you can look forward to higher volumes rather than larger ticket size or larger margins.
So there are so clearly, as you move up the value chain, right?
Yeah.
The stickiness and margins would probably increase.
Okay.
But even the cloud infrastructure business, right? Because of the multiplexing that happens across multiple customers, is a reasonable margin business, and it's a very high. You're right. The volumes are huge.
Okay.
Right? So the number of you put in more infrastructure. We have today our biggest challenge on cloud is making sure that we have enough infrastructure so it doesn't run out.
Okay.
Right? Because the value proposition we're giving to customers is that they can scale on demand.
Okay.
Right? So we have really had to look closely at our capacity planning to make sure that we have enough cloud resources.
Okay.
So that our customers can expand whenever they want.
What is the next growth phase for Netmagic?
Yeah.
One is synergizing with entities, global consumers.
Yes.
So, but how is that going to roll out really?
Yeah, so there are multiple synergies that we see, as I mentioned, to address the global customers in India and to take our services global. But really, the integration that we're looking at right now, the main areas is one is India offers tremendous talent and at very competitive rates, and so we are looking at doing remote infrastructure management for entities' global infrastructure from India. So India could become
How big is that market?
That's huge. I mean, it goes into it's a much larger market than that. This is where a lot of the IT majors like HCL, TCS, Infosys are all playing in the space.
Okay.
So this is one area that we are already working with NTT to be able to globally, to be able to, maybe manage from India as one of the key hubs for managing their global data center infrastructure.
Okay.
So that's one. Second is, we are going to be one of the key contributors to the NTT's Global Cloud Initiative.
Okay.
So that's another integration that we're in the process of doing. There are a lot of things in our cloud. NTT has a cloud of their own,
Okay.
but there are, we eventually over the next year or so, we will try to make this one global cloud, and a lot of the elements in the technology will be contributed to by us. We're also hoping that a lot of the software development for this initiative happens from India, from our side, and so really these are some of the steps as far as synergizing with NTT is concerned. I'm pretty confident that our growth will only hasten with NTT coming in,
Okay.
because we're going to be we're dealing with much larger customers than we've ever dealt with before, because they're global
Okay.
multinationals. In terms of the areas of high growth, cloud of course, but that's infrastructure in general. But in terms of peripherals that you mentioned, the two areas I see are very hot. One is this entire high availability piece, which includes data protection, disaster recovery, etc. And the other area that I see of very high growth is security.
Okay.
So the increasing number of attacks on customers globally, and so just when there's adversity, there's a lot of opportunity.
Yeah.
And so we've launched a series of services that we believe will, so we have our own security operations centers in India,
Okay.
and we also have a series of services ranging from managing firewalls to what we call as comprehensive network attack management services, and a host of other services for denial of service protection.
You know, one of the big questions that that were raised when this whole thing with the NTT took place is that, you know, NTT was looking for Patni, a company the size of Patni, and now they finally settled down, or they finally came to a deal with Netmagic. Is in some way the growth targets or the expectations that are given to you slightly overwhelming? What are those targets really? Could you be a little bit specific on that?
No problem. So I'm not sure if NTT Communications was dealing with Patni or not, right? So NTT, as I said, has many groups. NTT Data looks after application services. NTT Communications looks after infrastructure and, you know, service provider business, right? So I'm not sure if NTT Communications, I'm not really sure what really happened with Patni. But as far as we are concerned, NTT Communications wanted presence in India. They wanted presence on cloud, they wanted presence in data center, they wanted to increase their data center footprint to serve their global customers, and which is why this made a perfect fit. Yes, there are, given if we were growing at a certain percentage, right, naturally with NTT coming in, right, and giving us access to global multinationals, we should be able to grow faster. And hence, it's not that they've imposed any arbitrary targets on us. We've jointly decided that we will take much more aggressive targets. Right. So we have taken more aggressive targets. We would love to take more aggressive targets because we've already seen, so it's not that we have to do some, we focus on just the sales that we were doing earlier, and all we need to do is fulfill the business that NTT is bringing our way. We should be able to meet that target.
Will you be seeing a lot more hiring in terms of employees?
No, we are hiring, but at the same time, so it depends. For example,
you are now 500 plus employees.
Right? Yeah, I think 625. So we are growing. I mean, I think we ended last year at 500 and something. So we've already grown to 625. So we are growing. We are adding employees. There will be projects for which we will have to hire faster. For example, once we fully integrate and become the global head for software development, we need some software talent. When we fully integrate and become the global head for managing IT infrastructure for NTT Global, there will be people that we will have to hire for that. So there's going to be growth there. In normal course, even if NTT wasn't there, I would have expected some growth in people. So obviously the aim is, if you want to maximize our bottom line, we are doing more and more automation. We've partnered for not only the automation in the cloud space that we've done through our software team, but even for our network management, we've used BMC's BladeLogic tools for example, managing our infrastructure. And so the aim is to automate so that we can scale using technology rather than scale using people and improve our bottom line. But with just increasing data, we are adding 2 more data centers in the next 18 months. And so once you do that, right, you need a bare minimum team. So there's going to be natural growth in terms of number of people as well.
What is the percentage of customer base between India and globally for Netmagic today?
A very good question. Our business is such, right? Data center business is such that end of the day, only companies targeting Indian audience will host in India. So if you're targeting overseas audience, you'll probably host in the US or wherever you're targeting your audience. So while bulk of our revenue is in rupees, right? Because we're targeting companies in India, a lot of them are multinational. For example, we have various banks, right? And we have, we have customers like, Barclays Bank, Vodafone, etc. So a lot of these customers, right, are, multinationals, right? But the India offices are contracted with us. What NTT is bringing to us is customers where the decisions are being made overseas, right? So there could be a global customer of NTT where the decision is made, let's say, in the United States or in Europe or in Japan for that matter. And those customers, for their local presence, require hosting in India. And I would say we have a good mix, right? In terms of number of customers, clearly India would be higher because we've been in India now for 12 years. So with over 1,200 customers, right? I would say maybe 80% of the customers. But in terms of revenue, the gap would not be so wide. The gap, it would maybe 60-40 or something. Because the revenue per customer that NTT brings in, or even some of the global multinationals that we've signed before NTT, is a lot larger than some of the revenue that we've signed.
Is it possible to put a ticket size for this vertical of data center?
One can arrive at a ticket size by taking the total number of customers and dividing, but that wouldn't be fair, because what happens is, like, for example, on an average, the cloud customer, which is large in number, have a smaller ticket size. The colo and managed services customer typically have a larger ticket size. So by just giving an average number, it would kind of confuse people.
Correct.
So, but the ticket size, especially with NTT coming in, has more than doubled.
Okay.
So because now we're dealing with a much larger customer than we were doing earlier.
What is the average margin generally between infrastructure for service and a software service?
I don't know what it is in the case of software service. I think this industry has seen typically gross margins, not net margin. Net margin would depend on the company, but gross, because there's a huge amount of depreciation, etc. Right, because it's a very capital intensive business. But the industry sees gross margins anywhere from 30 to 55%. So it depends on the service. In
infrastructure
service.
Okay. Yeah. In software for service, it can vary.
It could be even higher. Yeah.
Okay.
And in general,
that's an interesting point even for Netmagic. If you're taking the cloud as a business that's fast growing, would you not want to take a more retail approach to cloud and create more of a marketing or a brand campaign?
A very good question. There are two distinct markets in cloud. One is the enterprise space, which can be done either through a public cloud or a private cloud. So it's an enterprise cloud, as I call it. So the public cloud implying multi-tenancy, private cloud meaning no multi-tenancy.
Okay.
And that's the space we're in, because that's the space we understand. And then there's the other is the cloud that you mentioned, where we call it retail cloud, which is catering to a lot of small businesses, a lot of startups, if you will, and that is more the self-service, not as much support, right? We are used to providing mission-critical support, so round the clock service, where that is more, everything is automated and you just do self-service. Customer hopefully is smart enough to figure out how to use it, and doesn't really depend on support from the service provider.
Okay.
So while our positioning has been more on the enterprise space, but we are, so some of the initiatives like we're doing with a company called Shepherds, for example, is to target that space as well. So, but there we think, that it should be done through platform as a service. And so while we are not getting to platform as a service ourselves, but we are partnered with companies like Orangescape and Shepherds, where they will provide the platform to these startups, and they will use our underlying infrastructure.
Is Sharad Sanghi looking at also becoming an investor, because now you become an advisor on Rajesh Swani's GSF, but are you also looking to become an investor?
So first of all, my philosophy in general, right, has been to kind of not just invest. So I have invested in a couple of companies earlier, right? So there is something I've done, very exciting company that you'll hear about soon, that I've invested along with Sanjay Gaikwad of UFO Movies, who I believe is one of the best entrepreneurs I've seen. I admire what he's achieved. And I don't want to just invest in something where I don't understand what's going on, right? I would like to be involved in something that I can understand and I can add some value. Right now I'm fully committed to NTT, so it's unlikely that I will spend, I don't want to, and I won't be allowed to spend any time with companies. Whether I invest in whether I invest in a company where I don't have, only time will tell, but it has to be something that I understand and excites me. But I'm not looking to. My aim is more to kind of mentor. So I'm working with Microsoft as well. They've got a startup accelerator program with Rajesh Swani, where I can add value in terms of for example, a lot of startups want to understand cloud. Be happy to do that.
On one last note, as a role as an advisor now, what would your advice be to startups in this space? Because this space is now clearly growing. You've got so many spaces in the peripherals, even in the mainstream IT hosting. So what would your real advice be to them?
I think they should, see, if I look at what I achieved even in Netmagic, right, there were lots of ups and downs, but I believed in the space. I understood that the space, so I had a very clear picture that, look, I am providing value to enterprises, right? So the Netmagic is providing value by sharing infrastructure, providing high uptime, providing security. These are things that the market needs, right? And this is something that you're providing value. So there was when we started, there was a dot-com bust. But we never gave up, right? We continued. So one is, if you're convinced that you are actually providing value in what you're doing, right? Then just stick to your belief and and hard work, and results will come.
All right.
A lot of startups I've seen, right? Some I've seen succeed, but a lot of them, after some time, you know, with a little bit of disappointment, may end up, you know, changing their business model. I'm not saying you don't adapt, right? I'm not saying that you shouldn't change your to market conditions, but sometimes they lose the vision that they started the company with, and I think that they shouldn't.
All right. So always keep going.
Yeah.
Be strong in your convictions.
Yes.
All right. On that note, Sharad Sanghi, thank you for talking to me.
My pleasure. Thanks so much for your time.